Hey traders, welcome to another global macro as well as a crypto market update. We're going to start off the video with the global macro and then we're going to jump into the crypto side as well. Global macro, talking about equities, has not done a whole lot. Metals are still moving to the upside here. Unfortunately, I did not catch the entry on silver because it was Sunday night. Just was not on my computer at that time and there was no real nice trending move. It was just a massive bullish push to the upside, so unfortunately we did not get that, but that's okay. We're going to be looking for continuation patterns within the cryptocurrency market. So let's start off with the S&P 500 because that's where we always like to start off within the global macro update. So let's zoom back, take a look at the daily chart and see where we currently are. So there was, in my opinion, a little bit of worry that we were breaking below the mid-June high at 32.26 within the S&P. We did hold that zone initially. We came back down, but it was a little bit worrying because that was a key horizontal zone that we went over, fell below. But the fact that we're holding this still holding a series of higher lows does indicate that the bullish continuation is still present. It'd be nice to see the price go back above the 32.40 zone in order for me to have a little bit more confidence in the overall structure. So let's take a picture what we can see right now. And this is a key level of resistance that I'd like to see the price go above before we really start to look for risk on trades within the global macro space. So we can see there are a series of higher lows and a horizontal level of resistance, creating an ascending triangle structure right here below a major structural resistance. So we know that there's a key structural horizontal zone and we're trending at making higher lows. So we're seeing this ascending triangle formation. So we do see that if we get a move to the upside, if we get a candle closure above our current level of resistance, we could probably hit that 32.80 high that we were at, which is going to be a pretty significant push to the upside, indicating that we're going to have a risk on environment where BTC alts are going to be doing well, and that's what we're going to be looking for. So if we see a move up above here, probably going to be looking for a high to get hit again somewhere around there. So if it does break, we're looking for a move to the upside to continue the trend, continue the risk on environment and sentiment to the upside. And if we break to the downside, we do see that this support zone is held very well as well. So right now, the current structure is a sideways consolidation, right? But we're also making higher lows. So this is the current structure. If we break to the upside, next target is up here. And if we break to the downside, we do see that the support is still held. So we're going to continue to look at the price as a consolidation sideways and not look for shorts, not look for short exposure, not look for risk off potential or exposure until we break the $3,200 level of support. If we break the $3,200 level of support, I think there's going to be further momentum to the downside. But as long as we're holding the higher lows, and if we break the key level of resistance, we're going to continue the move to the upside for the S&P. I think it's going to move up higher. We see other risk-on assets like Bitcoin absolutely really shoot to the upside. We see things like the US dollar absolutely collapse, which is a risk-off currency, which means that people are taking capital out of safe haven currencies like the Japanese yen, like the US dollar, and injecting it in more speculative investments. What's a little bit surprising, if we're talking about FX, is the fact that the euro is doing extremely well, but that's for another day of discussion. Little discussion on the Russell 2000 here in the small caps. We do see that it is holding the support very well. We were able to hold and create a higher high, and we're holding the horizontal level of support that we see right now. There is a confluence zone if we do connect the higher lows right here. So we will be looking for some sort of confluence where we see the ascending zone create a key level of demand along with the horizontal zone. We do have a little bit of time before that confluence zone does get hit. But overall, the Russell 2000 is moving to the upside, which is great to see. This is for the small caps. And what we're really going to be looking for or looking at for the continuation for risk on exposure is going to be the NASDAQ, because the NASDAQ has been relatively strong compared to many of the other indexes, not just in the United States, but globally. And we see the NASDAQ is holding after this very well-respected ascending zone and confluence with the horizontal zone. We do see it did fall a little bit before, or a little bit below the key support zone around 10.5, but it's just the wicks. We see that last time as well. We see wicks move to the downside, but there's buy pressure, there's bids, keeping the pressure on the price. So the price is able to hold this low, and it looks like we're now going to be trending back up, because that was an attempt to make a lower low. We were able to hold it, and I still view this as a consolidation sideways. So when we're near a low, if the overall structure of the market is risk on, the price is probably going to move to the upside, because global investors are seeking risk. They have higher risk tolerance, and they're looking for trades for risk on exposure, which the NASDAQ is definitely a significant index for that possible trade if you are looking for longs in certain equities, because the NASDAQ has done very, very well. So the fact that we're moving up, let's just go to the 1 hour here. We see that the fact that we're making and breaking this key structural zone right here, and it does look like we are holding it. That support, new resistance right there. So structurally speaking, we broke a major significant level, both as a support as well as the resistance from that zone right here. So now the momentum is to the upside, and I think the NASDAQ is going to continue to climb higher, which is just validating even further the obvious risk on sentiment and environment that we're currently in. So that's the NASDAQ. Quick look at the VIX here. We do see that there's a contraction within the VIX. It'd be nice if we were going to continue the risk on sentiment to drop below 23, like we had in previous times here, where we just slowly fade and move to the downside. That would be great to see. If we do break the key level of descending resistance as well as the horizontal level of sensitivity, that would be the market structure. So if we break both those, we could get a spike up, and that would obviously be in confluence with the S&P dropping quite substantially as well. So ideally, we would see the VIX continue to move to the downside, but if we do see the S&P actually break this series of higher lows and hold this key level of resistance and move to the downside, especially breaking 3,200, if the S&P does break 3,200, I would expect the VIX to break around 32-ish. And that could possibly create a huge move to the upside, because volatility spikes quite aggressively when the S&P falls quite quickly. The VIX moves quite quickly when the S&P falls, very, very aggressively. We saw it went from 32 to 41 in a matter of, let's say, a couple hours here. So, or let's say two handfuls of hours. Let's say 8 to 12 hours. So pretty quick. We don't see that right now. So the overall direction is, I think, bullish for risk on assets, but the VIX is still something pretty important to be looking at. All right, so quick look at the global equities. I think we're first going to be looking at the TikTok comments, because there are some TikTok comments that have come in. So I'll take a quick look at that, and then we'll get right into the global equities here, or global indexes. All right. What did happen to Bitcoin? How did it blow such? I don't exactly know. I assume you mean, why is Bitcoin moving to the upside? That's probably what you mean. Well, I can give you some information regarding the technicals, but in terms of just fundamentals, why are people buying it? I think it's two main reasons. One, monetary uncertainty. Central banks are printing a lot of money, right? Very well understood. Inflation is inevitable. We saw the last time we had this aggressive of a monetary expansion was in the late 40s, 50s, and 60s, were when interest rates were at like 2% federal funds rate. I'm talking about when I'm talking about interest rates. Very, very easy to borrow money, very cheap, easy money available within the economy. So that created a bubble, right? So then we saw the 60s have decent CPI numbers, inflation, and in the 70s, especially the late 70s, we had exponential CPI numbers, exponential inflation, and that's not good. And we saw things that are risk on assets, like the Dow Jones, fall substantially, inflation adjusted, right? Because there's high inflation, you have to adjust for inflation. But the Dow Jones fell substantially during the 70s, especially the late 70s, whereas things that were fixed supply assets like gold and silver did extremely well. That's because when there's monetary uncertainty, people run to fixed supply assets like precious metals. But what's interesting now is there's a new kid on the block, there's a new technology called blockchain that enables you to basically buy digital real estate. There's a finite amount of BTC available to buy that will ever be produced. It's not like gold and silver where we can go on an asteroid and mine it. There's literally only going to ever be 21 million Bitcoin, and there's going to be less because people lose it, people send it to wrong addresses, people have computers that they threw out that had Bitcoin on them in terms of the wallet. So there's going to be less than 21 million. So the fact that the US dollar is absolutely collapsing right now, losing value, and you see anti-fiats like gold and silver do really well, people are going to group Bitcoin in the same basket as gold and silver in my personal view. So we see gold and silver move to the upside, which then means that there's a high probability, if there is the chance that Bitcoin's going to be in the same basket as gold and silver, that Bitcoin's going to move as well, because there is a what you call a sympathy play in that kind of development of the two anti-fiats moving in the same direction, appreciating, compared to the US dollar that is depreciating because there is a proliferation of currency. So in the global macro scope, that is the reason, in my opinion, why BTC is doing well. Hopefully that answers your question. BTC pausing, then heading back up to 12K this week, like I predicted a couple weeks ago. So yeah, we'll see exactly where it's going to go. Best of luck to you on that call. What's your opinion about the banks allowing people to store crypto? I would say if it's not your keys, it's not your coins. I would only really store long-term investments in crypto using my own personal ledger, and I will not allow anyone to know what my seed codes or seed phrases, seed words are. And that is the only way that I would invest. I would not let banks hold on to my crypto. I would not invest through Robinhood. I would not invest through just holding it on an exchange. Yes, I have capital on an exchange because I like to trade, swing trade. But in terms of investments, dollar cost averaging, I would say the best way to dollar cost average is find a hardware wallet. You could even use a paper wallet in order to slowly accumulate crypto in a safe storage location. What did happen to Bitcoin? How did it blow? So yeah, I hopefully answered your question here. Gold all-time high. Yeah, exactly. So I'd like to see more of a positive correlation between gold and BTC. We can actually see right now the difference in correlation. So let me get my correlation chart here. Give me one moment. So let's look at the correlation between Bitcoin and gold, because right now we're actually going surprisingly a little bit negative initially. Let's go to the 90-day. So on the 90-day chart, we are seeing some increase in correlation between Bitcoin and gold, which is a good thing. You want to see positive correlation like we saw here. There's not a whole lot of positive correlation between Bitcoin and gold, but that is the ideal scenario. And then you want to see a negative correlation between the S&P and gold ideally, whereas we're not really seeing that right now, because right now we're seeing still a positive correlation between Bitcoin and the S&P, and still a negative correlation between Bitcoin and gold. But things are looking like they're shifting. We want gold and Bitcoin to be in the same grouping, because that means that people are looking at crypto as a means to store their value in times of monetary uncertainty. Is that TOS? This is TradingView. It's a charting platform I use. I think it's by far the best charting platform available. And for exchanges, I use Interactive Brokers, CMC Markets for the global macro. I'll use Binance, Bybit for my crypto trading. What will happen with Ethereum? I think it'll go up. Very simple. US cashless society coming this year. I don't know how quick it's going to come. I do think that it is inevitable with the digital world that we're living in today, as well as COVID. People don't like using cash. The Fed, the Chinese central bank are already aggressively pushing to try to implement a central bank digital currency. So I do think that there is a push for digitizing the kind of monetary system that we currently have. And I don't think it's a positive thing, to be completely honest. Yes, there is adoption, but if you're looking for security and privacy and anonymity, basically, if you have a private ledger that can see every single transaction done in, let's say, digital Canadian dollars or digital US dollars, they can know every single transaction that you've done. So if you're selling something on Facebook, if you're buying something, any single transaction, no matter how small, they can actually look at it, they can tax you on it. Depending on how you look at it, it could be a positive, negative thing. But if the central banks are going to implement central bank digital currencies, I do think that there's going to be a rise and demand for privacy tokens like Monero, in my personal belief. Just going to be looking at my alts that I'm going to be keeping an eye on. All right. The Dirty Librarian. How high can gold and silver go? Well, I think quite a bit higher than we are now. So let me give you a quick example. In the start of the 70s, gold was at like $250 or something along the lines of that. Late 60s, early 70s, gold was at like $250, $240. By 1980, gold was at like $2,000, and silver more than 10x due to the easy money environment of the late 40s, 50s, and into the 60s, and late 60s was really bad, and then 70s was the decade of increasing inflation and really, really solid opportunities in fixed supply assets. So if you're going to ask me how high can gold and silver go, I think a lot higher than what we're seeing right now, because you got to ask yourself, how much money were we printing in the 40s and 50s? A lot. How much are we printing now? More than the 40s, 50s, and 60s. And they had 2% interest rates. Now we have 0, as well as the global central banks are at negative or basically 0. So there's a lot of easy money. There's a lot of credit expansion. There's a lot of zombie companies. There's a lot of companies that are just barely able to pay off the interest, let alone not even pay off the principal. So I think that there's a pretty significant bubble because of the easy money. And I think that gold and silver will be a huge, huge play in the next handful of years. So I think it's going to go a lot higher. I think this is just the start of the metal market bull run, because a lot of people do not know anything about gold and silver and have no idea of its intrinsic value and the ability for them to hold their wealth over a long period of time, because we've been in a bear market for 7 years. Gold hasn't really done much since 2011, and then in the fall of 2019 it broke out of 1400, and that's when it really started to rally. And silver only recently broke out of its long-term consolidation that it's been in for 7 years. So silver has a lot more to gold. It has a lot of catching up to do, but I do think that gold and silver are both going to be continuing its move to the upside for the next 2020 for sure, in my opinion. There's going to be pullbacks, there's going to be consolidations, and that's what we're looking for, because we're looking for continuation patterns to add to our positions. So longer term, I'm bullish. Shorter term, I'm bullish. I'm a huge bull in metals. Loaded up on APT. Target is at 100. I don't know what APT is. You cut out. Can you repeat, please? I do not know what I cut out, so unfortunately I'm not going to repeat everything I said. Ethereum leading the market and heading to 460 in August. Yeah, we'll see. I'm just looking for continuation patterns. I definitely think that it's still going to be bullish. I very much agree with that, but I don't know. I'm not the one to set way beyond targets. I just trade the structure, trade to take profit, let it run for as long as it allows me to take the profit, and then just hold it from there. And then in my investments, it's going to be another couple of years, I think, before we really start to reap the rewards of dollar cost averaging through the bear markets. So, not going to go on the TikTok. I'm going to quickly look at the global macro here in terms of the equities. German market index is pulling back, retesting the previous resistance as a new level of support. Good to see. UK's FTSE 100 is just consolidating. Vanguard is holding the support from the previous resistance, testing the high at around 79. So it's just consolidating. Definitely in line with the overall sentiment, and then the Japanese stock market index is looking a little bit better. It did look a little bit weak after we got a break of this ascending zone, but it does look like it's holding the previous low right there, so it's just consolidating and not really doing a whole lot. We do see a consolidation in the SPX and the NASDAQ and the Russell 2000, so it makes sense. We start seeing these equities break their consolidation like we saw within the DAX. That would definitely mean that we're going to potentially create a further upside move and to further have exposure and risk on assets. So, in short, we're going to continue the trend in very, very short. All right, so quick look at the US dollar. So the fact that we broke below 94, why are we looking at 94? If we are going to the monthly chart, we do see very, very strong level. Initially, it was 94.63, and then we saw support back here. We saw support back here, and if we're really zooming out, we did see supports all along here. So we don't see a complete candle closure, but we are moving faster and faster to the downside. So I'm just going short US dollar, weakening of the US dollar, which is really good for gold, silver, crypto, and that's where I am focusing my efforts in my personal opinion. In terms of potential levels of support, I don't know. That's pretty far away. I think I'd rather just look at the shorter time frames and just look to see if there is demand coming in. Because we can see, yes, there is some support zone. So if we go to the monthly to really understand where the next zones are, we see another one right here. Wick, candle closure, resistance right there. So that's another potential zone. And we also see this zone right around here. Because we see candle closures, we see wick closures. Could probably go like this as well. Like that. So next zone's around 93, next zone's around 91 in terms of the weekly. Let's go to the daily and zoom out on that too. Yeah, I'm pretty happy with that. So let's now go into the smaller time frames, to the 4 hour, and just take all this off. Kind of start from a fresh chart because just kept on falling, went more and more aggressive. So we know that this is a very strong zone. If it comes up and holds there, could be just a candle to the downside on the weekly or 2-day. We do want to take that into account. And then we're just going to draw some descending zones to see if we can get any nice structures to hold for this descending zone. So I think I'm going to go there because we see 1, 2, 3. We could get more aggressive with it. Like we could go here and like that. So we could go aggressive with it. Why not? Let's just go here. Doesn't mean that we're going to long right if it breaks this, but it gives us an indication if the buyers are weakening still, or if they're trying to get up, if they're trying to rally and find a support zone. Because right now we do not see that at all. We see the dollar weakening. Not many people are interested in injecting capital in the dollar. There's a lot of people that are looking for risk on exposure, that are looking for risky trades, which is definitely a bullish sentiment, which is what we're in right now. So these are the two trend lines that I see. We did see a nice descending support zone that did fall below. So right now, I'm just viewing the US dollar in a downtrend. I'm looking for shorts on the US dollar. I'm looking for dollar weakness. And I'm not going to change my bias on the dollar until we see something very aggressive happen. Like we can see right here, we got a very, very aggressive move to the downside, like so. And then what you're looking for is a change in structure, sort of like this. So you see this high get rejected right there, and then you see a new resistance turn into support. Yes, it came back down here, and then it held that next high. But overall, you do see a shift in structure, and that's where you might want to be looking for a possible hesitation. But then obviously, because of the trend, you'd be just looking for ascending zones that would break again to the downside. So what we're looking for, let's take a picture to have a good understanding of what we're doing. If it breaks this zone, it doesn't mean that we're looking for longs at all. All it means is that we have a potential shift in structure from a downtrend to then a consolidation. A consolidation could mean a little move to the upside. This is where we have our ascending wedges, our ascending triangles, our consolidation sideways, and then a move down and then a retest and a move back to carry the momentum to the downside. So that's what we're looking for, right? We're not looking for a move to the upside yet. That's very, very risky in my opinion. We want to continue the trend, but what we can ideally see is something like this, right? We want to see these nice structures. So then what we're looking for is something like that. So ideally, in a perfect world, we want to see the price go like this, break a couple of these descending zones to indicate that we are now changing the structure. We don't want to look for longs because the momentum and global macro sentiment is definitely to the downside. We have to understand that. Now, if there's a massive bullish candle like that, that obviously would be a little bit different. And then if we break some major significant zones, like if we broke the 95, that would definitely mean that we could be using that zone as a new level of support. But as long as it's kind of carrying its aggressive push, nice rollover, aggressive push, nice rollover, aggressive push, we could be looking for something along the lines of that. So in terms of the dollar weakness, I'm still looking for it to continue, but it's just in the impulse push to the down right now. So I want to make sure that we're trying to get the best possible outcome for our trades. It looks a little bit overextended. If you are looking for further dollar weakness, I think a retest of around the 94 zone could be good for the DXY. But overall momentum is obviously to the downside. So I'm going to heavily respect that. So that's going to be my view of it. We made some good we captured some good opportunities for dollar weakness, but at this point, I think it's getting a little bit extended or overextended to a point that I want to see some corrections. I want to see a pullback so then it's able to recharge and push to the downside. Wow, that was rude. Says, hey man, I need help. Curious on what you need help with. Definitely may not be able to help you on everything, but if you give me a quick question, I may be of assistance. So it does not hurt to ask. So that's a little bit of discussion on the US dollar. Quick discussion now on the FX market, just so we have a good understanding of global risk sentiment and global capital flows basically in the currency market, which is a huge market. So first things first, if we're understanding that this is a risk on environment, we should be seeing things that are risk on currencies move to the upside and risk off currencies move to the downside. Now what I've noticed is Euro is acting more like a risk on currency when the risk on environment is present and less of a risk off currency. When there is a move to the downside, Euro actually goes down, but when there is a risk on environment, Euro actually gets a lot of bid, even more than some of the other risk on currencies, like for example the Canadian dollar that has not been doing nearly as well compared to things like GBP. Australian dollar has been doing decently well, but is falling behind a little bit. So when we actually look at this, it's a little bit odd because the European risk off currencies like Swiss franc and euro are doing the best. Little bit surprising, but that is the current market. What's been doing the worst is definitely USD and JPY. What's this right here? At the very bottom, USD, right? And then JPY is not here because it is going to be everything that we're pairing against. So but they're very well correlated, USD and JPY. So we see USD and JPY, which are the extreme risk off, do the worst. They're not getting any bids, meaning that capital is flowing into more speculative currencies. A little bit surprising that it's Euro and CHF, but yeah, Euro is really taking the lead here. The next one up, if we're looking back in, let's say, early July, so basically like 3 weeks in, is going to be the Australian dollar, which has done better than a lot of these other risk-on currencies, so it makes sense. But Euro is just very, very strong right now compared to basically every other currency. So in a perfect world, if this is going to continue, I think a really good pairing situation would be Euro against USD or Euro against JPY. That would be the best relative strength pairing that I personally think has the highest potential to continue towards the upside. If you're looking for more of a traditional pairing where you're just doing risk on versus risk off, and you're not pairing off versus off or on versus on, that would mean that you're pairing only risk on versus risk off or off versus on. Then I would use Australian dollar by U or J, so like AU or AJ, so Australian dollar versus USD, or Australian dollar versus Japanese yen. I think those would be pretty good opportunities, but Euro is really taking the lead for the currency that's getting the most bid as of now. Quick discussion on that. All right, so like I said before, unfortunately did not get an entry on silver because it was the Sunday night at, let's say, 6, 7. I was eating some dinner. I was not on the computer, and then by the time I was looking at a computer, it was way above. It would have been nice to get a possible retest, maybe at like $23, but if it comes back, it's a possibility, but you're not going to catch them all, especially if you're trading in a 24-hour market or 24/5 market. That's just pretty well impossible, or you just have zero life. You're not doing anything other than staring at a chart or staring on your phone for, let's say, 19 hours of the day if you're waking up at the middle of the night to get entries as well. I've done that. It's not fun. It's really unhealthy. You lose a lot of happiness, let's say. It's not really worth it. So I'll take not entering this for a little bit more happiness. So fortunate that we couldn't get an entry because I think it's still going to go towards the upside. We are really looking at a smaller entry here. We do see it is forming higher highs and higher lows, although I don't really see a structure worth trading here. It'd be nice if we're able to get like something like this. That would be nice on a 15-minute chart, but I don't really see anything that gives me an edge in trading the markets right now. So silver's a no-go for me. It'd be nice to entry here. What I would have done is definitely put a stop loss above this retest candle, so my entry would have been right around here, and the stop loss would have been below that previous low, or from being a little bit more conservative, that low. So that's basically how I structured the entry. Stop entry above the retest candle high, or low if I'm short. So that would have been a really awesome zero drawdown entry. So fortunately, did not play out, but that is how it goes sometimes. Also, quickly looking at gold, it is still moving towards the upside. This ascending zone broke to the upside, hit the high right there, or the target of gold at around 1935. We do see the weekly candle close higher than any other time on this chart. So if we're really zooming back, we do see that it hit all-time highs here on this chart, and it's closing higher than any other period. So obviously extremely bullish. At this point, I just look for pullback continuation patterns. Just looking at gold, and that's about it. We do see gold has a little bit better of a structure, where we see a nice high base forming, where we see this current level of support hold, and then we see a resistance right here. So right now, this is considered a high base, where it's failing to make a higher high, but failing to make a lower low. It's just an equilibrium between the buyers and sellers, and once we see the price break and retest the previous resistance as a new level of support, we could then look for continuation patterns to the upside in my personal views. So like again, I'm bullish on gold and silver, but I'm not going to randomly enter. I want to have a very well-respected structure before I look to gain any further exposure on gold and silver, and I don't see that right now, so I'm not going to be looking to enter, although we do see some nice descending trend lines creating lower highs. So if we do get something like this, where we're able to get a descending zone connecting the lower highs, and then you see a squeeze towards the apex, that would be a structure I'd be looking to trade, because then you could be creating a descending triangle, which is a good solid structure for continuation. But that's basically the first option. You could be holding something like this, like an ascending zone like there, and that would be an ascending triangle formation, which would be good for continuation as well. So it's definitely still too early to be looking for a structure, but I am looking for continuation patterns, because I do think that gold and silver are going to further move towards the upside. Gold and silver ratio is still moving to the downside, broke that key level. We don't really see it stop moving to the downside, so further continuation, in my view, of silver. So I think that that's going to be the place to be. Gold and silver is going to be the place to be. Yes, crypto, but definitely if you're not trading gold and silver, and if you trade, definitely look at ETFs, single stocks, CDFs, or CFD, sorry, contract for differences, as well as futures. Whatever you are looking for, I would be looking at gold and silver, in my personal view. So I'll keep this right there because I do think that the S&P is going to be a pretty important thing to be looking at for the next upcoming week here. And we're now going to be looking at some crypto here. So quick look at the correlation. We already talked about this, but we do see a decreasing amount of correlation between BTC and the SPX. Not a whole lot. We are making lower lows and lower highs, with the correlation within the last 9 days being around 0.17. So 17% correlated between the S&P and the Bitcoin price action. So something to note. Still positively correlated. All right, going to get a little bit of coffee, water, and then we'll go on to the crypto market update here. Actually, what I'm going to do is close it here because I like to split it off. Videos taking seemingly too long. People are saying that they don't watch it because it's like an hour, hour and a half every single day. So we're going to make a separate video for the crypto market update, but that was a global macro update. Thank you very much for watching. Hope you enjoyed it. If you have any questions, comments, concerns, definitely don't hesitate to drop a comment in the comment section below, and we will answer it. And for people who would like to get more of these updates, and for people who thought this was useful, it'd be great if you would subscribe. It does help us out and helps our channel grow. And if you like it, it shows that we should be making more videos like this. So thank you for watching. We will do a crypto market update very shortly. Until next time, have a good one, traders.